Welcome friends to Sapphire Talks English. Now friends, imagine that you are telling an Indian in 2015 that very soon you will be able to walk into a tiny kirana shop, scan a QR code, type a 4-digit PIN and money will transfer instantly from your bank account to the shopkeeper's bank account. Your friend would probably say, okay, now next you will tell me that the phone is going to replace my wallet. Well, it basically did. Today, UPI has become so deeply embedded in our lives that we hardly think about it anymore. Buy tea, pay with UPI. Buy vegetables, pay with UPI. Restaurant bill, that also is paid with UPI. Splitting the bill with your friend who has suddenly become very philosophical when it's time to pay, that also is done through UPI. And the scale is absolutely massive. In May 2026 alone, UPI processed 23.2 billion transactions with a total value of 29.9 lakh crore rupees. I will repeat, my friends. In May 2026 alone, that is within 1 month alone, UPI has processed more than 23.2 billion transactions with a total value of nearly rupees 29.9 lakh crores. Think about it. This is now just not a payment system anymore. This is now a part of our economic infrastructure, and there's an interesting part here. For consumers, UPI has generally been free. You scan, enter your PIN, money moves, and nobody says, Sir, please give me 7 rupees 50 paise more towards convenience fees. Right? But here comes a big question now. If UPI is free for the consumer, who is actually paying for the system? Because servers aren't free, cyber security isn't free, fraud prevention isn't free, banks, payment service providers, and the entire system infrastructure doesn't run on blessings from the universe. And for years, the government has supported the ecosystem financially. Between financial year 2021-22 and financial year 2024-25, the government has provided approximately 8,730 crores in incentives to support the UPI system. So now we arrive at the big story of 2026. The government has opened the door to charging for digital payments. But this is very important that it does not mean that you are going to be charged right from tomorrow for every 500 rupees you transfer. So what has changed exactly? Let's understand that first. This is where social media headlines become slightly creative. You may have heard headlines saying UPI charges are coming, or somebody else is saying government has imposed a 0.5% fee on UPI. And I'll tell you my personal favorite. Get ready to pay tax every time you scan a QR code. Friends, relax. This is not what the law actually does. The Taxation and Other Laws Amendment Bill 2026 amends provisions relating to electronic payment charges, including Section 10A of the Payment and Settlement Systems Act 2007. Earlier, Section 10A provided statutory protection against certain charges for prescribed electronic payment modes. UPI and RuPay debit cards were brought within this framework. That was an important part of the architecture behind the zero MDR regime. Now, Parliament has changed this framework. The government gets better flexibility to determine through notifications where changes may be permitted. And this distinction is extremely important. This amendment does not itself say from tomorrow every UPI transaction will attract a 0.5% tax. No. It basically says that the legal roadblock to charging has been removed. The actual questions are how much will be charged, which transactions will be charged, which merchants will charge, and who will pay, and of course, when does it start. These are separate policy questions. So if somebody tells you UPI has become chargeable at 0.3% from today, you can politely tell them, boss, thoda fact check karo. Because the much discussed 0.3 to 0.5% figures are proposals or reported possibilities and not a universally applicable fee prescribed by this amendment. And there's another important point. The finance minister has indicated that ordinary end users are not the target of this proposed mechanism. So the immediate concern is much more about the merchant side MDR or merchant discount rate And that brings us to the real question, who ultimately pays? Because economics has one very annoying habit, somebody always pays. Now let's take a simple example. Suppose you are a merchant and you receive rupees 10,000 through UPI. Now imagine that hypothetically, and I repeat here hypothetically, an MDR of 0.5% is introduced. This means that for the transaction of rupees 10,000, you pay rupees 50 towards processing cost. Now the merchant here, that is you, have three choices. Number one, absorb the rupees 50. Congratulations to the consumer, but your, that is the merchant's profit margin just went down. Second choice, pass the rupees 50 on to the consumer. Now the consumer will have to pay indirectly the processing fee. Or the third choice is change your payment behavior pattern. Maybe you can start pushing consumers back to cash, cards, or any other payment method if available. And this is why the UPI fee debate is much bigger than who will pay the rupees 5, because pricing always changes behavior. And let's now come to the controversial part, that is the United States. There are allegations, and I repeat allegations, and commentary suggesting that American payment companies could have an interest in India's UPI pricing structure. Why? Because UPI has fundamentally changed the payment market, at least in India. Think about the traditional card ecosystem. You have international payment networks such as Visa and Mastercard. They operate global payment networks and earn revenues from the card ecosystem. But India has created something very different, a domestic, interoperable, extremely low cost, efficient, real time payment infrastructure. And the UPI has become absolutely enormous. So, naturally, the geopolitical question is, could the success of UPI be hurting the commercial interests of international payment networks? There have been some concerns raised in US trade policy circles regarding India's digital payment infrastructure and the competitive environment for foreign payment providers. And this is why some commentators are connecting the dots. They say maybe pressure from the United States, maybe pressure from American payment companies, or maybe the broader India US trade negotiations could have contributed to the change in India's UPI policy. But here, my friends, we need to push the fact check button, because there is currently no publicly established evidence that the US government forced India to introduce UPI charges. Let me repeat, no established evidence of US government coercion. The claim that America directly or indirectly pressured India into changing the UPI charging framework should therefore be treated as an unconfirmed allegation, not a fact, not an established link. It is a theory being discussed by commentators and political voices. And there is a huge difference between the US has concerns about India's payment ecosystem and the US forced India to impose UPI charges. The first can be supported by documented policy discussions. The second always remains unproven. And as responsible content creators, we should keep these two things separate. But otherwise, 5 minutes later, WhatsApp University will award us an honorary PhD. Now, let's step back from the controversy, because there is actually a legitimate economic argument on either side. On one side, you have the argument for sustainability. UPI is now processing billions of transactions every month. Someone has to pay for the infrastructure, cyber security, fraud monitoring, technology upgradation, banking systems, payment processing, and if the entire ecosystem is permanently dependent on government incentives, that's not necessarily sustainable in the long term. So, one argument is, let large commercial transactions pay a small fee and keep basic digital payments accessible. That sounds reasonable, right? But there's another side also. Zero MDR was one of the major reasons UPI has exploded. Think about a small shopkeeper, a rupees 100 purchase, a rupees 500 purchase, a rupees 1000 purchase. If there is no transaction cost, why would the merchant say cash only? There is very little friction. But if you introduce charges, even small ones, behavior can change. And India has millions of tiny merchants. For them, even a small percentage does matter. There is another concern also. Suppose a merchant pays the MDR. Maybe he absorbs it, maybe he doesn't. If he increases prices by tiny amount across thousands of transactions, the consumer may ultimately pay indirectly. So saying that the consumer won't be charged doesn't necessarily mean that the consumer will never bear any economic cost. Economics is a bit more complicated than that. And there's one more strategic issue. UPI isn't merely an app feature, it is increasingly part of India's digital sovereignty. India has built a payment system that is fast, interoperable, massive in scale, and largely based on domestic infrastructure. And that has strategic implications. Because when you control the payment rails, you have greater control over an important part of your digital economy. That is why the UPI debate should not be reduced to will Google Pay charge me rupees 2 more or will any other app charge me rupees 2 more. The real question is how do you monetize a digital public infrastructure without destroying the very economics that made it successful? And that is the policy challenge. So let's answer the $1,000,000 question. Is UPI becoming a paid service? As of now, the answer is no. The amendment does not automatically impose a fee on every UPI transaction. What Parliament has done is create a legal framework that makes future charges possible. The next steps will determine who pays, how much they pay, which transactions are covered, and which merchants are covered. And most importantly, whether small value digital payments will stay protected. Now, as regards the USA angle, there are legitimate questions about international payment competition and US trade policy concerns. But claims that the US government forced India to introduce UPI charges are, at least at this stage, unconfirmed. So let's not confuse a possibility with a fact. Now, personally, I think this is going to be a fascinating story to watch. Because UPI started as a payment revolution, it has become a business ecosystem, and now it is becoming a geopolitical and economic issue. And that tells you just how important UPI has become. So the next time you scan that little QR code in your neighborhood shop, remember you are not just transferring rupees 200. You are participating in one of the world's largest experiments in digital payments. And whether the experiment remains completely free, well, that's for the future to decide. Friends, if you have found this video useful, please like the video because it helps us reach more people who are interested in understanding what's actually happening behind the headlines. And if you haven't already subscribed to Sapphire Talks English, please do so immediately. We bring to you economics, geopolitics, business, and current affairs, but without making you feel like you're attending a 3-hour board meeting. Thank you for watching so far. I'll see you in the next one. Till then, goodbye. Jai Hind, Jai Bharat, Vande Mataram.